Good morning, good morning, good morning. I trust everyone had a fantastic weekend. What day is it? It's Monday, obviously, the 16th of September. Let's just wait for Mr. Brown. I do hope he's made it through the weekend. There he is. Hang on. Let's do that bit. Wait for him to join, and then I can do the legals, and then we can get it rolling. Is he there? Here he is. He's coming.
Good morning, Ryan. Good morning, everyone.
Good morning. Let me just quickly do the legals. So nothing discussed on this basis session constitute trading or investment advice or infers any kind of endorsement by PIQ Global Limited, trading as PIQ or PIQ Suite or its affiliates, including the hosts, which, as ever, is Mr. Michael Brown and myself, Mr. Ryan Paisley. Did you have a good weekend?
Yes, very good, thank you, mate. How was yours?
Yeah, it was all right, actually. Not too bad. I only drank on Saturday, so I had... Friday, so I had Saturday and Sunday to kind of sober up, so I'm feeling okay today.
Oh, that's quite an achievement for you, isn't it?
Well, this is it. Yeah, this is it.
Like a new man.
Let's not get carried away.
Oh, yeah, true. I suppose one swallow doesn't make a summer and all that.
Well, this is it. Oi, oi. Right, so what's happened over the
God,
weekend?
fucking hell. It's Monday morning. God, dearie
we live
me.
for 1 minute, and here we go. Already dragged into the ditch. That is my
yes,
Mind.
indeed. Right.
What's happening?
Yes, what has happened? Well, let's go back to Friday, first of all, because it was a positive end to the week for financial markets. The S&P 500 and the Nasdaq both rallying by around about 0.5% into the close on Friday. The S&P notching its best week of the year so far and its best week since November of 2023, as markets erased pretty much all of the declines that we saw a week prior as participants appeared to reconcile themselves with the idea that they may get fewer cuts, or at least a smaller cut on Wednesday from the Fed than they had perhaps once thought.
Obviously,
in terms
was obviously those absolute people, like those absolute wrong uns that were expecting a 50 basis point cut, right?
Well, it's interesting you say that, because looking at the LIS curve as the Fed week gets underway and ahead of Powell's big day on Wednesday, the market is very, very delicately poised this morning. I wrote this around about an hour ago, and it may have changed since, but the market currently implying a 50.6% chance of a 25 basis point cut, and naturally implying a 49.4% chance that the Fed will deliver a 50 basis point cut. And I think this is clearly a very, very delicately poised market at this moment in time. But this takes me back to a conversation I had with our very good mutual friend Adam Linton on Friday, in that the Fed have been very careful to manage market expectations and to try and limit volatility around their policy decisions for pretty much the entire cycle so far. And this time around, as we move into what is arguably the most delicate and perhaps the most dangerous point of the cycle, just as they deliver the first rate cut, markets are pretty much on a knife edge as to the magnitude of the cut that will be delivered. So it's not beyond the realms of possibility that we do get some sort of sources article, shall we say, at some point in the next couple of days, just to manage those expectations a little bit.
100% on the same page here, because 100% was obviously, just to remind everyone, obviously we're in the Fed blackout period, so the Fed can't officially say anything. However, we do have people like what's his name, Nick at the Wall Street Journal.
Nick Timmerhouse at the Wall Street Journal, Steve Leisman at CNBC seems to get the inside track a little bit as well. And as Michael said, basically, to simplify what Michael said for those at the back, basically, the last thing that the Fed want is for markets to be volatile when they put their announcement out. And obviously, if half the people are expecting a 50 basis point cut and they deliver 25, then the market's going to spaz out. Technical term there for you, and vice versa. So what you would associate them doing based on previous things is a couple of little sources comments to say basically they're leaning towards one way or the other. It will be leaning towards 25, let's be honest, and that will give the market time to reprice ahead of the actual real announcement, and then you'll get less volatility. That's the way it will probably go. And to be honest, if we're seeing the market pricing 2 days out at 50-50, 50 basis points and 25 basis points, 50% for each, I'd be shocked if we don't get something coming out somewhere. Yes, so would I. I know it's slightly different, but I think there was an instance in 2023, last summer, when I believe the market was kind of not necessarily 50-50, but very evenly split between whether it was going to be a 50 basis point or a 75 basis point hike. And the Fed did put out a story into the media, I think it was on the Tuesday, very much steering towards a 75 basis point move, which they then did deliver. So again, you could see something like that. So what we're really saying is, just be aware that, we could get a fairly dramatic repricing of those
Yeah.
odds, at some point
Based on a
before the
source's
Fed
comment.
decision.
And when we say a
Exactly.
source's, we don't mean any wanker on Twitter that just tweets something. It has to be like, it will be an
No.
official media outlet, journalist from one of those.
Yeah, Wall Street Journal,
Yeah.
Bloomberg, someone like that. In any case,
Yeah.
moving on from that momentarily, we will come back to the Fed in a second, of
great.
course, and just covering Friday and the weekend. The dollar trading relatively heavy on Friday, with the dollar index this morning trading back below the 101 figure and within around about 0.2% of the year-to-date lows that we saw earlier last month, which come in around 101.50. The yen has been the biggest beneficiary of this bout of dollar weakness. Dollar yen trading below 140 this morning for the first time since the middle of 2023. So some fairly Oh God, please don't. So some fairly chunky moves taking place there. And of course, this comes ahead of not only the FOMC, but also the BOJ, who will be announcing policy on Friday as well. The other notable market move that we saw towards the back end of last week came in the precious metal space. Gold rallying by around 0.7% on Friday, up another, just 0.1% this morning. But the yellow metal has once again found its shine and is trading to fresh all-time highs this morning, trading around $2,590 an ounce in the spot.
Can I just drop in a story, because it saves us going back to gold later on, that Andrew would put out on his morning email regarding gold?
Is this about gold?
No, it's about the Saudis. There's been some reports over the weekend that Saudis have joined Asian currencies in ditching their long-term sensitivity to the gold price, and there's evidence to suggest that the Saudi central bank has been covertly buying 160 tons of gold in Switzerland since 2022, and this has contributed to the gold bull market. There's obviously some, but this is kind of being backed by some evidence. Obviously, it's covert. We're not getting anyone to sign off on it yet, but there are some speculation out there that it's ahead of the BRICS meeting in October, which I don't really buy. There's also some speculation that it's ahead of what they deem to be the end of the petrodollar. Again, it might just be that they want gold taps and gold toilet seats, let's be honest. But it's worth noting that it looks like the Saudis have been buying a ton of gold. Well, literally 160 tons of gold. So there you go.
That is a very good point, and of course that is coupled with all of the other EM central bank demand going on, China purchases, etc. Cool. Moving on from that, actually I mentioned China, so I'll stick with that. They are hiking their retirement age for the first time since 1978. Men in China will now have to work until 63 if they make it that far. Women will have to not be able to retire until they are 58.
Sounds a bit sexist to me.
In terms of well, exactly. Equality clearly hasn't made it over there just yet. In terms of other catalysts and news flow, on Friday, we had the latest consumer sentiment survey from the University of Michigan. The index rising to 69 from a prior 67.9, according to the preliminary gauge in September. The details of the report were a little bit more interesting, though. The 1-year inflation expectations gauge, that fell to 2.7%, which is its lowest level since December of 2020. But at the same time, the sort of longer run gauge, which covers the 5 to 10 year period, that rose to its highest level since November of 2023. So again, it's just another one of these data releases. I was speaking about this.
When's this interesting bit you mentioned?
Well, no, I was just going to say, it's another one of these data releases,
all right.
as we've had with a number of US prints recently, where you can almost frame it either way, whether you're a hawk or a dove. You look at the non-farm payrolls number. Headline jobs growth slowing, we need to cut more, but unemployment's come down and wages are hot, so we don't. Then you look at CPI, headlines at its lowest level since Feb 21. The core month on month was actually hotter than expected. The same with the PPI data. So Exactly. But I think also it just speaks to the sort of heightened sensitivity that markets
Yeah.
continue to display to incoming data because we haven't had this guidance from the Fed. Anyway, where we have had plenty of guidance from is the ECB. We had a bonanza of ECB speakers on Friday, 11
Oof.
in total, governing council members
Oof.
speaking throughout the day, including the Luxembourg
Oof.
central bank governor, Mr. Reinisch. And that was, I'll have you know, the first time he's spoken publicly about monetary policy since 2015. He's been in the job since 2013 and he has made 2 sets of public remarks on policy. One was in 2015, one was yesterday.
That stinks of they've got somewhat new PR company and they're like, mate, you need to do something. Please, just go out and say anything.
Well,
talk about Dario's gold BMW, but just do anything.
The ironic thing is, I think his term's up next year, so I'm not entirely sure why he's bothering. But anyway, he didn't have much to say that was of any interest, and to be honest, nor did the other 10. They were all sticking to the script that the ECB are not pre-committing to any sort of path. They're determined to reach their inflation target, and that they will follow a data-dependent approach to further policy easing. Of course, the euro ignored all of this.
Maybe that's why the Saudis are buying gold. Maybe it's Dario Perkins is kind of his trend-setting gold BMW. Maybe they're going to start releasing some of those. You never know. Morning, Dario.
You never know, mate. I was going to say, he must be on the call. Right, that's pretty much it. One last thing from me is, of course, over the weekend, this supposed second assassination attempt on President Trump. Not entirely sure whether this was or not, although the FBI are saying that they believe it was. This was, and this sounds as dodgy as it is, a man hiding in the bushes at a golf course where Trump was playing golf with a gun. Trump is safe. The suspect has been arrested and, of course, will naturally and deservedly have the book thrown at him. Doesn't seem to have been too much of a market impact from that, given that everyone is majorly worried about what the Fed are going to do on Wednesday.
He might have been a Swiftie.
But if we do, well, you never know. But if you do see
guns pointed at you, please run.
Well, yes, that, but also if you do see, God, I lost my train of thought here. Polling support. Of course, after the first assassination attempt, Trump did find some support in the polls. Maybe we see a similar thing this time around. First time that caused the market to go all in on this kind of Trump trade, long stocks, long dollar. We'll see if that happens again. But thus far, the impact has been very, very muted indeed. And that is pretty much it from me this morning, to be honest. We can go to your geopolitical shenanigans.
Run through from our friends at News Corp, as always. Barrel laughs in the Middle East, so we'll start there. The Yemeni Houthis claim responsibility for a missile attack on central Israel and stated that the Yemeni missile reached Israel after 20 missiles failed to intercept it. They've been bigging up, but this is some hypersonic missile, which the smarter people in the room than me that says that's definitely not the case. The Israeli PM Netanyahu said that the Yemen's Houthis will know that they will suffer a heavy price for every attempt to harm Israel, and noted that a missile fire from Yemen most likely fragmented in midair. So there you go. In terms of Russia, we got Medvedev, who, if everyone remembers, is extremely aggressive in his language. I think he's the one that's always calling for small nuclear weapons to be deployed. Medvedev has said that Russia already has formal grounds to use nuclear weapons, there we go, but has so far chosen not to do so, while the patience has limits and the response might come in non-nuclear form. We've got Zelensky said that Ukraine brought home 103 prisoners of war from Russia in a second swap in 2 days, and noticed the incursion into Kursk helped bring about prisoner exchange. We've got the Ukrainian spy chief said North Korea's artillery supplies to Russia are a major problem and have visible battlefield impact. And I do recall somewhere that it's not on the News Corp page. I think I might have seen it on PIQ Suite, which is that someone from North Korea's kind of upper echelon, is going to Russia today, tomorrow, so that's one to keep an eye on perhaps. Russia and Chinese warships practiced missile and artillery firing in the Sea of Japan as part of their Ocean 2024 drills. China's military said that the transit of 2 German warships in the Taiwan Strait increased security risks and sent the wrong signal. Chinese troops are always on high alert and ready to counter all threats and provocations. Going to the South China Sea, I would love to be honest, somewhere I'd actually genuinely like to go. China's Coast Guard said the Philippines.
Oh, we can park you on that
Well,
rusty
funny
boat
enough, you
that's
say
out
that.
there.
This is where this story's going. Yeah.
Oh, right. Oh.
So China's Coast Guard said the Philippine vessel 9701 withdrew from the Sabina Shoal on September the 14th, which illegally stayed there for nearly 5 months, while it added that China took measures against the Philippine vessel in accordance with the law. So perhaps that means that
That's a catchy name for a
what
boat, that, isn't it? Philippine
9701.
vessel
Well, I'm
9701.
now thinking
Yeah.
that this Sabina Shoal is left unguarded. So maybe we go over there, mate. Me and you, morning blast from there. Lovely jubbly.
There are many things in this world that I don't have any inclination to do, and one of them is to be stuck on an isolated
Wow.
island with you.
Wow. Not with me. It'd be barrel laughs, mate. Barrel laughs. Just one, not one. Well, I think Andrew's obviously mentioned a lot, but one thing that stood out this morning was obviously Boeing being on the verge of being cut to junk by Moody's due to the potential, of the extended strike. Obviously, there's the machine workers at Boeing are on strike again. They're not getting paid enough to not tighten screws and bolts. Just a few bits to pick up.
Because say it's amazing when your credit rating reflects the quality of your product.
Yeah,
well,
right. There actually might be ahead of the curve on this one for once. Just a few stories from Reuters that have been picked up on PIQ Suite. We've got Goldman Sachs have said hedge funds have switched to buying banks, insurance and trading firms. So last week snapped up these company stocks at the fastest pace since June 2023. In the EU, we've had the French European Commissioner Thierry Breton on Monday said he would step down as member of the EU executive body over a rift with Commission President von der Leyen, alleging that she asked Paris to withdraw his candidacy. So this seems to be,
Oh, there's got to be something dodgy
well, do you know
going on.
what?
Someone's got a brown envelope,
Well,
haven't they?
brown envelope, brown nose, something else is brown. I'm not going to go into that one, mate. But the thing is, something's obviously happened there. Let's be honest. Also, we've got this morning. By the time I'm reading this, there's probably more information than I have. But when I put all this together this morning, police operation underway after an explosion in Cologne in Germany. It's underway on the Hohenzollern Ring Road. I've butchered it, but that's what I'm sticking with. Volkswagen may book 3 to 4 billion euros in provisioned on capacity cuts. That basically means they're going to book a loss. We know that they're shutting down a lot of factories in Germany, which is obviously sending lots of shockwaves through the auto sector in Europe. They're putting a lot of blame on this to obviously China coming in and getting into the market, but also the EU Commission have set these emission targets where basically if European manufacturers don't hit an average emissions number over their whole manufactured cars in that region, that they then get fined, and it says they're like millions of EVs short to get that average down. So that's why they're going to look to just shut up shop in a couple of places. And finally, the tables have turned between Italy and Germany, because if you remember a few years back when it was the Germans and all that having to bail out Southern Europe, it looks like UniCredit, the largest bank in Italy, second largest bank, quietly last week took a 9% stake in Commerzbank and said they want to be, quote, an active shareholder. And this is leading to... Sorry, go on.
Well, no, they did indeed. They managed to do that so quietly that you even missed my mention of it in 2 of these calls on 2 days running.
I completely missed that. Did you? I really can't remember that. Oh, God.
Yes,
and I thought I had a nice relaxing weekend as well. Anyway. That's me done. So what have we got to look forward to today?
Well,
have you already
absolutely
told
nothing,
us?
to be honest with you. Today's data docket is completely empty. We've got some ECB speakers. De Guindos and Lane will be speaking throughout the day, but they're going to stick to the script that the other 11 of them outlined on Friday, so it's not going to be of much interest. And in terms of economic data, we've got the monthly manufacturing survey from the New York Fed, but that's of pretty much no interest whatsoever to anyone. Thankfully, of course, the week does get a little bit busier as time progresses. Just to go through through very briefly what's coming up over the next 4 or 5 days. Tuesday, we have a couple of interesting data releases. We get the latest CPI figures due from Canada. CPI expected at 2.1% in August from a prior 2.5%. And of course, view this in light of an interview that BOC Governor Tiff Macklem gave to the Financial Times over the weekend, where he was touting the possibility of bigger rate cuts from the BOC before the end of the year. So if we were to get a soft number there, that could obviously spur bets on a 50 basis point cut from the BOC. We also have the latest US retail sales figures due on Tuesday. And of course, this comes just a day before the September FOMC decision, expected to fall by 0.2% on a monthly basis in August, compared to the 1% rise that we saw in the month of July, although of course that data will be another data point that markets focus on as they try to adjust their expectations for that Fed meeting on Wednesday evening. Moving into Wednesday then, before we get to the Fed, we have the latest inflation figures from here in the UK. Headline prices expected to remain unchanged at 2.2% on an annual basis in August. The core number expected to tick higher to 3.5 for a 3.3% prior. Remember, of course, the CPI figures come just a day before the next BOE decision, not expecting any change from the BOE on Thursday, and the CPI figures shouldn't influence their outlook too significantly. Wednesday's main event, though, of course, comes from the Fed, as I mentioned earlier on. Markets fully expecting at least a 25 basis point cut, although seeing a larger 50 basis point move as effectively a coin flip. Of course, with this being the September meeting, we will also get the latest summary of economic projections. So the dot plot will be closely watched for any hints on the policy outlook. Although do just take that dot plot with a huge pinch of salt, because at the June meeting, when the dots were last published, they were revised to show a median expectation of 25 basis points of easing this year, and we're now talking about the dots showing 75 basis points of easing just 3 months later. So I appreciate the Fed do change as the data changes, but the dots are not a sort of concrete guide to policy, but they will be focused on by markets nonetheless, as of course will be Fed Chair Powell's post-meeting press conference, but we can talk in a little bit more detail about the Fed on Wednesday. And again, just for those who missed it earlier, Ryan and I talking about the potential for sources stories in advance of that Fed meeting. So do be alert to that, particularly if you're running any exposures, well, really across the board, to be completely honest. Thursday figure of Australia. That will be interesting ahead of the RBA decision next Tuesday. We also have policy decisions due from the Norges Bank. They should keep policy unchanged, and the BOE, they will also keep policy unchanged, although the BOE will announce their latest views on quantitative tightening, the process of running down their balance sheet. It will be interesting to see what they do there, particularly in the context of what looks to be a little bit of a funding squeeze going on in the UK at the moment, given that rise in short-term repo usage. Thursday also brings our latest and weekly update on the jobless claims data out of the United States, the initial claims print this week pertaining to the non-farm payroll survey week. And we also get earnings from FedEx after the close on Thursday. Not going to be a huge market mover, but they are another one of these bellwether stocks that are worth paying some attention to. And then moving into the back end of the week on Friday, the central bank bonanza continues with the Bank of Japan. The BOJ expected to hold rates unchanged at 0.25%. The sources stories that we've had in advance of the BOJ indicate that the recent volatility, which of course they triggered, has not materially impacted their policy outlook, so we expect them to be relatively hawkish. And also on Friday we have the latest retail sales and public sector borrowing data from here in the UK. So a busy week ahead. The Fed, of course, the main highlight for market participants, but plenty else going on besides. And I think before the Fed, the two key things to watch are the potential for any hints ahead of that decision, and also the retail sales print that we get from the US on Tuesday, as that is the last sort of top tier point that we get before the Fed decision. And that is pretty much it. And I hope I haven't missed anything.
Thinking aloud. And this isn't going to happen, but just...
Oh, this is dangerous.
Yeah, well, it is very dangerous. And so basically what I'm about to say, I'm going to caveat with it won't happen, but it's just something I just thought of. Say, for instance, we don't get any sources to kind of, lean us one way or the other, 25 or 50 basis point cut. That technically, I guess you could argue, increases the chance that the Fed are going to cut 37.5 basis points, which they completely are allowed to do. I'm not saying it's going to happen, but it would be the way to rock the market the least if that's what they chose to do. Technically,
from an academic point of view, but I mean, they're never going to do it.
Can you just say that word again? I don't think anything I've ever spoken about has been described as academic. Can you say that again?
I regretted using that actually, but
it's the book smarts that people come here for.
Can you smell it? Can you spell it? Academic.
I'll get back to you on that one. But on that note, everyone, if you are trading, keep it tight. We will be here tomorrow, obviously. Much love.
And all week.
by the sounds of it, not from an island. Cool. Right, guys. Michael, thank you so much. Listeners, thank you so much as always. And we will see you tomorrow.
Nice one. Thank you, mate. Bye. Cheers, guys. Bye-bye.